I took an online loan, then kept taking more, the horrifying truth of digital loans. It was 11 o'clock at night. A man was trying to sleep after turning off his room's light. Just then the phone vibrated. There was an unknown number on the screen, and the message simply read, "If you don't pay, everyone will find out." He thought this would be just an EMI reminder. But in the next 10 minutes, 3 calls, 5 messages, and an edited photo had arrived on his WhatsApp. Now, the loan was not just a matter of money, it had become a matter of fear. The strangest thing was that the very loan that had given him relief on the first day was now attacking his sleep, respect, and relationships. The mobile, which was meant to help, gradually became a recovery tool. And right from here the question arises. Is a digital loan truly a solution for an emergency, or is it a tunnel where if a person enters once, they have to take a new loan again to get out? Today in India, sudden needs like medical expenses, car servicing, rent, school fees, and credit card payments are pushing millions of people toward short-term loans. Savings are low, pressure is high, and the loan button on the app looks very easy. As soon as someone searches instant loan or 5-minute loan on the phone, dozens of apps appear. Someone says money will be received without long paperwork. Someone says an approval can be found even if the salary is low. At first glance, this facility looks wonderful. No long bank lines, no questions and answers with the manager, no collateral, and many times money directly in the account. But this exact speed does not give many people time to think. Digital lending has truly brought credit to many people, especially to those for whom a traditional bank loan was difficult. But like every good technology, its dark side is seen when the cost hides behind convenience. A recent report by India Today brought this exact dark side forward. The report contains stories of such borrowers who got the loan in a few minutes, but as soon as they missed the repayment, continuous fear started in their lives. A 28-year-old woman from Delhi, after losing her job, took a digital loan of around 1 lakh rupees to pay rent and credit card bills. The money came quickly, so she felt that she had handled the crisis. Her planning was simple. A new job will be found, salary will come, and the loan will be repaid. But the job market did not fulfill her expectation as quickly as the app started demanding the EMI. One EMI was missed, and recovery calls started. On the first day, calls were few, then the frequency increased. After some time, the situation became such that the phone started ringing every hour, and every ring became panic. The agent scared her that if the payment was not made, her family members and former employer would be told. This threat was more like a personal humiliation than a legal notice, because the target was not money but social fear. That woman later closed the loan by taking money from a friend. But what remained in her mind was very deep. For her, the worst thing was not the loan, but that continuous fear. This fear was clearly visible in the expert panel survey as well. According to the report, out of 10,000 distressed borrowers, around 72% reported experiencing harassment from recovery agents, and many people complained of repeated calls. This figure tells that the problem is not isolated. This is not the story of just one app, one city, or one borrower. This is the story of that system where borrowing is easy, but repayment pressure can be very aggressive. The maximum vulnerability is seen in those young borrowers who are taking credit for the first time. According to the report, the share of Gen Z among first-time borrowers was stated to be 41%, and many among them take loans for gadgets. This does not mean that every digital loan is bad. The real difference is made by the lender terms, repayment capacity, and the borrower's understanding. The problem begins when the loan is too easy and the conditions are too blurry. Today many people look at the loan amount, but do not look at the annual percentage rate. The EMI looks small, but processing fees, penal charges, GST, late fees, and a short tenure combined can make the real cost very big. The RBI has made the key fact statement, meaning KFS, important in digital lending, so that the real cost of the loan, APR, charges and repayment terms are clearly visible to the borrower. But the problem is that many people do not read the KFS at all. The word approved flashes on the screen of the loan app, and the borrower's eyes get fixed on that alone. The processing fees, cooling off option, and penalty terms written below in small letters are often understood later. The most terrifying part of a digital loan is many times not the interest, but the data. While installing the app, the borrower gives permission for access to contacts, photos, files, or media because he feels it is a normal process. But finance experts warn that access to contacts and personal media is not needed for lending. If any app demands this access as a condition for giving a loan, it can create leverage over the borrower. Imagine, you have the numbers of family, boss, colleagues, clients, and neighbors in your phone. If an unethical recovery operator uses these contacts to give threats, the loan does not remain private. This is the reason why many victims break down in shame and fear before making the payment. They feel that if the family or workplace finds out, the financial problem will turn into a social insult. The story of a delivery worker from Delhi NCR makes this vicious cycle even clearer. After an accident, he had to take an online loan for bike repair and everyday expenses because the bike alone was the basis of his income. The loan had to be repaid in 3 months. But after the accident, the income did not remain like before. Expenses increased and the EMI date kept coming closer. When the first loan could not be repaid, he took a second loan. The second loan was to close the old loan, not to fulfill a need. Then a third loan came to handle the installment of the second one. In this way, the tool of help gradually became a debt trap. That borrower was essentially borrowing not to spend new money, but to extinguish the fire of the old debt. But every new loan kept bringing its own fees, interest, and pressure along with it. This itself is the silent danger of a digital loan. A small emergency begins with a small ticket loan. Then late fees get added, then a second app comes, then third-party calls come and a person's control starts ending. Some apps give a time of just 1 or 2 weeks for repayment. Such a short tenure makes a poor borrower, or one with an unstable income, more vulnerable because the due date arrives before the next cash inflow comes. Now the question is how to identify the difference between legal and illegal. First of all, it is necessary to verify whether the lender is linked to an RBI regulated bank or NBFC or not. Just the name of the app is not a guarantee of trust. According to the PIB, the RBI operationalized the Digital Lending Apps Directory from the 1st of July 2025, in which information about apps deployed by RBI regulated entities is available. This helps the borrower to verify the app's claim. But caution is necessary here too. The appearance of the app's name in the directory is not an endorsement, but rather one step of verification. The borrower should check the lender name, NBFC partnership, KFS, and grievance officer details too. In the RBI's Digital Lending Directions 2025, mandatory provisions have been placed on areas like recovery, data privacy, and grievance redressal. This means that in a regulated ecosystem, the borrower's rights should not be just on paper. According to the RBI FAQ, if a recovery agent is assigned when a loan defaults, the agent's details must be told to the borrower beforehand via email or SMS. A sudden threat from an unknown person cannot be considered normal recovery. The borrower should also understand that a recovery agent is not a police officer. He does not hold the right to abuse, threaten, publicly shame or scare the family. A loan default is a civil financial matter, not a personal attack. In 2026, the RBI proposed even stricter draft norms on recovery agents, which included measures like preventing the misuse of personal information and monitoring recovery calls. This is a sign that the regulator is considering the problem serious. But making rules and getting them followed on the ground are two different challenges. Therefore, the borrower himself also has to collect evidence. Keeping call recordings, message screenshots, payment receipts, and the loan agreement safe is necessary. If an app threatens to send messages to contacts, makes morphed photos, abuses, or sends fake legal notices, staying silent out of fear is not the solution. This can go into the category of harassment and cybercrime. In such cases, the National Cybercrime Portal and the 1930 helpline are important ways. A complaint related to an unauthorized loan app or data misuse can be reported in the cybercrime system so that a digital trail is recorded. The RBI Sachet portal is also useful for complaints related to suspicious unauthorized lending entities or illegal money collection. If a grievance remains unresolved with a regulated lender, the RBI Ombudsman route can also be available. But there is one more practical step before a complaint. The borrower should send a written email to the lender asking for the loan statement, outstanding breakup, charges, recovery agent details, and grievance officer contact. A written record is better than a verbal argument. If making the payment is not possible, the borrower should not run away. Writing and telling the lender about the financial hardship, asking about restructuring or settlement possibilities, and keeping proof of every communication is a better way than panic. Many people do not talk to their family due to shame, and in this exact silence, the wrong app becomes powerful. If harassment is increasing, it should be told early to a trustworthy person, legal advisor, or financial counselor. While taking a digital loan, remember one basic rule. If the reason for taking the loan is a lifestyle upgrade, but the income is not stable, do not consider approval as success. Approval is the lender's decision. Repayment is your responsibility. The second rule is linked to an emergency fund. If 3 to 6 months of basic expenses are kept aside, the dependency on an instant loan in needs like medical bills, vehicle repair, or rent can reduce. The third rule is to be careful while taking a new personal loan for credit card payments. If spending habits do not change, the loan does not close the credit card, it only shifts the problem from one place to another. The fourth rule is to check app permissions. If a loan app is asking for access to contacts, gallery, SMS, or social media, stop. In legitimate lending, credit assessment and KYC are necessary, not your entire private life. The fifth rule is to look at the APR. Just a lower monthly EMI appearing is not enough. Only when the annual percentage rate, processing fees, penal charges and tenure are combined does one understand whether the loan is cheap or an expensive trap. The sixth rule is to understand the cooling off period. In many digital loans, the borrower can get a short window in which he can return the principal and proportionate cost to exit. This detail should be looked at carefully in the KFS. The seventh rule is not to take another loan to repay one loan unless the full repayment plan is clear. As soon as debt cycling starts, the borrower is not reducing hard work, he just starts working for the interest. Now comes the most important twist in the story. The real villain of a digital loan is not technology. The villain is haste, opaque charges, data misuse, illegal recovery, and that helplessness of the borrower which does not let him read the terms. If technology is in the right hands, it becomes financial inclusion. In the wrong hands, that same technology becomes a weapon of shame, surveillance, and psychological pressure. Therefore, the credibility of the institution is more important than the app. The borrower who is already in the trap should not consider himself a criminal. A loan default can create stress, but tolerating harassment is not a compulsion. The law allows recovery, not insult. If the agent says that the police will come, jail will happen, or the family will be defamed, ask for written proof immediately. A genuine legal process runs on documents, not on random WhatsApp threats and abusive calls. If an app has already sent messages to your contacts, save all screenshots. Note down the number from which the threat came. Keep the bank statement, disbursal amount, and repayment proof in one folder. Then draft a clear complaint. In it, write the details of the app name, lender name, loan amount, dates, threats, screenshots, and the demanded money. Emotion is understandable, but a complaint becomes strong with facts. To stay financially safe, ask yourself 3 questions before taking a loan. Is this expense essential? Will the EMI come out comfortably from my income? And have I understood the charges completely? If even one answer is weak among these 3 questions, it is better to stop. A loan getting rejected is sometimes a blessing, because every approved money does not bring peace to your financial life.
This video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.